Today's podcast is brought to you by Moody's Analytics CRE. As a commercial real estate professional, you manage complicated decisions every day, and to make the right call, you need the full story. Moody's Analytics CRE harnesses expansive integrated data and analytical expertise from across the Moody's organization, then curates it specifically for commercial real estate professionals. Learn how to make better decisions and improve CRE workflows with Moody's Analytics CRE solutions at cre.moodysanalytics.com.
Welcome to WMRE's Common Area Podcast. This podcast is brought to you by the award-winning editorial staff at WMRE. Let's jump right into this week's podcast.
Hello and welcome to the Common Area with your host, David Bodamer. David, how are you?
I'm doing well. Happy New Year. First episode of 2022. How are you?
So far, so good. I'm crossing fingers that the rest of the year will be just like this. No surprises this year, right?
Hopefully.
Yeah. Well, it's no surprise to me. You have another guest on the show. I know it's Dan, and I'm not sure even Dan's last name. So why don't you tell us, and why is he on the show today?
Yeah, with us Dan Spiegel, who is the Senior Vice President and Managing Director of Coldwell Banker Commercial. I brought Dan on. Coldwell Bankers, just such an important player in the space overall, and they've got a good outlook report that has come out with this good overview of what they're expecting to see in 2022. I thought that would be a good conversation to have as we get our New Year podcast going.
Yeah, you're bringing in the big guns. This is fantastic. Dan, thank you so much for being on the show.
It's great to be here. Thanks for having me.
So I gave you a little intro, but if you just want to take a second to tell people any more about yourself and also about your company, though I imagine a lot of our listeners are familiar with you guys, but just for those who aren't, if you can kind of give us that.
Great, David. Thank you so much. Again, Dan Spiegel, Managing Director of Coldwell Banker Commercial. We are a commercial real estate services provider across the U.S. and around the globe. We have about 3,000 practitioners domestically, and we cover pretty much all the major food groups of property in markets large and small. Actually, much of our coverage is in secondary and tertiary markets in the U.S. So we have a great perspective that's sometimes a little bit different from the coverage you see in the major markets. Myself, I've been in the commercial real estate industry close to 3 decades. I hate to admit it, but that is what it is. And I enjoy it. And, the market today is really just another permutation of what goes on in commercial real estate. And I look forward to speaking about it.
Yeah, I think that is actually a good point. And one reason I do enjoy talking with your firm over the years is that you guys have this penetration in the secondary and tertiary markets and offer that insight that I think is very important to get. So I'm looking forward to hearing that. So with your, we're coming off of 2021, some of the ups and downs that we've all been living through with the pandemic for commercial real estate. It was a pretty solid year, pretty much across the board for all the property types. Some property types did amazingly well. And I think even like the biggest one that we still have some questions on is return to office and the long-term future of what offices are going to look like. So all that stuff's kind of hanging out there, but overall it was a good year. REITs, you look at the REITs, they were up tremendously. Investment sales volume was up tremendously. So just given that, what are some of the expectations now for 2022?
Yeah, it's a great recap of 2021. I think at least the last 2 years have been surprising, both in the economy as a whole and in commercial real estate. With every shock that's happened, we're never quite sure where it's going to lead. And fortunately for the past year, it's actually turned out quite well for commercial real estate. As we look ahead, right now we're thinking there's going to be actually kind of a continuation of what has been a pretty strong market across the board. As you mentioned, office leasing, particularly in central business districts, is still a question, although one does read about some sizable leases happening across the country. There are certainly firms that are not yet returned to work and ones that are, having a different philosophy about their occupancy strategy. So that's definitely a question mark. And then the hospitality is another question mark, right? Because, resort properties are doing quite well, but, those properties that are located in downtown markets, dependent on that business traffic are, certainly a question mark as to when they'll come back and the revenue stream will return. But overall for 2022, we're really looking at a continuation of a pretty strong market. Interest rates are expected to tick up. We'll see what impact that has in general when funds are looking for real estate investment. and cash is on the sideline, the interest rate doesn't have a huge impact. It's more of an impact for the private investor. But we're looking at some strong fundamentals, fueled by stable cash flows and pent-up demand, and we'll continue to see an active market in 2022.
And in terms of, looking at some of the secondary markets compared to the primary markets, are any divergences in terms of performance or in some of these trends?
Yeah, I mean, it's a great question. There's, if you're from an investment standpoint, if you're looking for a net leased, freestanding retail establishment, that doesn't really matter, right? Those can be in suburban markets of big cities, and they can be in secondary. But when you're looking at things like office space, right? The office demand for smaller office buildings and smaller office space in secondary and tertiary markets has continued to be strong from our conversations with our professionals across the country. And then some of the trends that have been in the large markets are reaching smaller markets, like the demand and the new construction of large distribution and industrial distribution and warehouse facilities. So the trends in the secondary and tertiary markets have been good, and they're probably even better, fueled by investors looking to invest capital, coming from the coast where cap rates have gone down, looking for better returns, and then also the pandemic-driven or shift in population, at least focus on some of the secondary and tertiary markets.
And do you see, in terms of comparison and yields of core markets versus some of the secondary, tertiary, are those gaps tightening at all as people get more interested in some of these other markets?
Yeah, that's a great question. So the answer is yes, but there still is a higher return in the smaller markets. I mean, I will tell you, earlier in the middle of last year, I'd spoken at an event, a business event in Grand Junction, Colorado, which certainly is an institutional market. But they affirmed 100% that they have investors coming from California and other West Coast markets seeking returns in a market where you typically wouldn't be looking for, investors wouldn't typically be looking for to acquire property. So those returns are still preferential in the secondary and tertiary markets. Although as investors pour in, those cap rates get compressed as well.
And in terms of like those investors that are looking at these kind of markets, has that also changed? Are there new kinds of capital that you're seeing in some of these markets that maybe weren't there before?
I don't think we've seen new types of capital. I just think what we've witnessed is investors that might have said in the past, I'll just stick to the West Coast for a moment, I only want to buy in California, Arizona, and Nevada. Perhaps now they're just not finding what they want. And they're saying, hey, let's look in Wyoming or Idaho or Montana, right? They're stretching both their property type search preferred, as well as their geography to find investment properties that meet their criteria.
Got it. So pivoting to one of the property sectors, in your report, you've got a heading here that says, build to rent is the new multifamily. And that's certainly something that we've covered a lot over the past year, just as a lot, not just even over, I guess, the past several years, is the expansion of the single family rental market, the institutionalization of it, and then and it becoming so popular that in order to get the product, now you have this dynamic of just straight building houses that are meant to go straight into this rental pipeline. So it kind of, so it seems like that's something that you expect to continue this year.
Yeah, absolutely. It's super interesting, right? If you think about it, and given that our company has a residential arm as well, right? Right. In a sense, private investors have been doing this for years, right? Buying a house, maybe upgrading it, and then renting it out, right? That's been very common for the private investor for years. And now, over the past, maybe we'll say 2 years, institutional money, as you pointed out, has really poured into this segment, looking at it as just a whole investment class unto itself, kind of as a comparable to multifamily. So it's in secondary and tertiary markets in particular, where housing demand and maybe lack of supply is particularly notable. We've seen an uptick in land sales, and land sales really have been going for two purposes, really across the country, but particularly in secondary and tertiary, which is either for multifamily development, and it can be multifamily build to rent, or for industrial. Those are the two, land uses, land demand that have been going off the charts. And build to rent is sort of a new, and obviously it takes a big chunk of land to build a whole subdivision to rent, but it's an interesting twist. It's something that I don't think we would have been talking about 3 years ago.
Yeah, it does seem to be, again, the institutionalization of it, but also I guess from the renter preference level, people in this reality that we've had, or I think, or maybe people that in the past would have been your typical new home buyers just continuing to rent homes now instead of buying. It just seems like a lot of dynamics are coming together to sort of fuel this demand for rental of the single family housing stock.
Right. And it just wasn't thought of, as I said, a number of years ago, as an institutional class investment. And now it is. And I think that's a very interesting dynamic going on. But it definitely, there's outside of the commercial space, there's a lot of talk about lack of housing inventory across the board. So, build to rent or single family to rent is certainly fills some of that gap in demand.
So you also flagged industrial as being a big user of some of that land. And I think it was the CEO of Prologis recently who said something like that. There's basically no there's no space to rent any right now, just because demand for industrial is so hot, and that that speaks to a demand to the need to build out more of this space. So you're seeing a pretty healthy development pipeline in both primary and secondary markets for the industrial sector.
Yeah, absolutely across the board. I will say just at the end of last year, going into this year, I can think of 2 large transactions that happened that were just for this purpose. One is outside Laredo, Texas, right? Not necessarily a major distribution market, like a Chicago or New Jersey or Southern California. So that's one. And another was a large land deal we facilitated in Savannah. Now they're both near key access points, right? Savannah being near a port and Laredo being near the border. But they're both large industrial developments that are going up just to help satisfy the demand. As I said earlier, that's interesting because prior to that, and continuing as well, but was building 1 million square foot distribution centers in Chicago, Inland Empire, maybe Atlanta, Dallas, and New Jersey. And now you're seeing these large or larger facilities coming in the secondary and tertiary markets, as you mentioned, just to fulfill demand.
Yeah, it seems from what the way that we've been covering it too, that there's this, it's all about the logistics, distribution, and almost like a blending of retail and industrial in a way where you need people want stuff quickly, and people are even using what were retail stores as almost local distribution hubs, and that there's like this coming together of retail and industrial even further than it was in the past. That's at least one, and that seems like a trend that would then drive the need for last mile, for rapid fulfillment in all markets. And I don't know if that kind of makes sense.
Yeah, I think across the board. Listen, the demand for retail goods didn't disappear, right? We all still want things. We just are expecting them to reach us in different manners. So maybe there certainly has been a change in the shift of retailing, right? So the regional malls in most communities have been struggling, right? But the demand didn't disappear. The demand just shifted to industrial. And what I like to say last year was industrial is the new retail. Right. And it's not exactly, one for one, but you know what I mean? It's like, our demand for be it batteries or clothing or anything we want around our house has not gone away. It's just that how we expect to obtain those products has changed. And the majority of that change has been through e-commerce, and which, demands for distribution space, and no less if you're in, Charleston, South Carolina, than if you're in Atlanta, right? It doesn't make any difference. Big or small communities, that demand is there.
Right. And it also seems like it creates this dynamic of, okay, if we're going to order more stuff online or through some kind of blended model, the way that the order gets fulfilled can take a few different forms now. If it's not coming straight to your house, it's still maybe useful to have a retail presence for people nearby where they could pick the item up, but also for returns, it becomes useful. So I think like it almost seems like the retail store itself now is part of the distribution channel in a different way. It's not just a place where somebody's going in and making a transaction to buy a thing. It could be where they're picking something up that they already bought or returning it. And so therefore, the way that the whole logistics chain flows for retailers has become very important. And again, that's something that's not just for big markets, but true for small markets.
Correct. It should be true across the board, right? It shouldn't make any difference whether you're a big or small market. But I think you make a great visual there about the retail store is there for distribution as well, or sort of distribution channel. I think maybe the difference is, whereas you used to go into a retail store expecting it to be stocked full of product that you could take home, now perhaps you order that product online. Maybe you experience it in the retail store if you want to check it out first, but you order the product online and pick it up at the retail store, right? If you don't get it delivered to your house. So that is a difference, but it doesn't make it still certainly makes the retailer relevant in today's world.
Right. And then there are some retailer, I think what's been interesting is that, we talk about retail dying or being, for years, but there are a bunch of of concepts that started as online retailers that now exist in the physical world because it seemed like they felt like they needed that. Even if it wasn't going to be the core of their business, it still was helpful to them, like Warby Parker, to have stores to fully develop their concept.
Yeah, absolutely. I mean, one thing that's exciting about commercial real estate in general is it is changing. It's always changing all the years, but it's being in the middle of those changes that's super interesting, right? So you mentioned Warby Parker, right? They have stores that go along with their online presence. And then there's the mattresses, right? If you're,
right.
That's something that some people just can't buy without trying out. So it's a distribution and representation of the brand. That you're not solely online and you're not just in person, you're a blend of both, and to the customer, at least, it should be seamless. And for the commercial real estate aspect, there's a demand for the retail space and there's a demand to make sure the distribution space can facilitate delivery.
So another, connected to retail, another point that's in this report is MedTail and the emergence of that as complementing the hospital system, but also taking up space that used to be more traditional retail. So I think that's one of the factors there's retail's kind of gotten beaten up over the years, but I think there are these couple of factors would actually have helped what were historically retail properties is this distribution thing that they're playing, but also now that the role that they're playing in the medical sector. So can you talk about that for a minute, since that's in your report?
Yeah, it's another good and interesting trend that's going on where, I think it begins from a commercial real estate standpoint of we're going to be continuing to think of assets in ways that they weren't necessarily built for. So a retail strip mall or regional power center might have only been thought to be full of restaurants and stores, right? And medical office space would have gone to an office property. But in today's world, I think it's perfectly accepted now. Frankly, it drives traffic to have a medical office use, a drop-in clinic, a dialysis center, a cancer treatment center, all those different types of things in a retail center. The healthcare systems have found it's beneficial for them to be closer to the customer. And as in many places, they compete for insured customers or any customers, frankly. They try to put those retail outlets just closer to where their client base is, right? So it's just an interesting, whereas the retail center may have been thought of in restaurants and retail, but now it's office. Even to some extent, the restaurant, the delivery business, right? The food delivery business out of restaurants, is that it could almost be a warehouse or an industrial use if it's a ghost kitchen,
right?
But how much, when a restaurant does, and I don't know the percentage across the country, but a smaller percentage of in-person dining and a larger percentage of delivery and pickup, is that really still a retail use? I'm not sure. So I think it's an interesting, the medical retail or MedTail is symptomatic of sort of a shifting perception of how commercial real estate assets are used, not for their sole intended purposes, but for different types of purposes now and into the future.
Yeah. And I think it's interesting, if you're looking at a lot of restaurants now setting up for the quick service, some of them setting up multiple drive-through lanes now, or for other kinds of restaurants having multiple entrances so that there's one for people who are coming to dine in or pick up stuff themselves, but now an entire part of it that's just for the delivery business and separating that stuff out. So it's interesting the way that the physical layout and some of the land needs are changing for the restaurants as a result of of increasing takeout, delivery, et cetera.
Right. And it's kind of going in two directions. On the one hand, it's going from the dining experience to more takeout and delivery, right? That's going that way. But I also, just where I live here in Chicago, I noticed that a food business that was delivery only is now going into physical space. They're actually opening a restaurant, right? So it's interesting how it's kind of going both directions. You could be a ghost kitchen to start, right? And then your product can become so popular, you're like, oh, we should open up another location or an in-person location, right? That's sort of the other direction. That's where you see happening.
Yeah. There certainly is a lot of ghost kitchen stuff happening in New York too. And I don't know what to make of all of them, but
right.
It's going to be the shakeout of how some of these concepts, play out over the next few years will be interesting. I think so. I guess the last major sector that I think we touched on a little bit, but just overall, maybe going a little more into what you're seeing in the office sector, and if there's any further clarity at this point as to what we think is going to happen there over the course of this year.
Yeah, I think office is, and I don't want to maybe I'm not negative on office. I think it's just a question mark today. I think towards the end of last year, or maybe let's go back. Let's say in the middle of last year, people said, hey, there'll be a return to the office in the early fall. And then pandemic-driven situations we'll be at the beginning of the year. And now our current virus, Omicron and so forth, we'll see what happens. So I just think there's a lot of uncertainty. As I said, you still do see firms making decisions to take space because they believe in the long run, there's a benefit to being in person. And at the same time, there are businesses and users that'll say, like, I want to be either less in person and more at home, or I want a more distributed model. And I think we're still in the middle of users, occupiers trying to figure that out. And therefore, the impact of commercial real estate is still TBD. One thing about office leases is they tend to be long-term, right? 5 or 10 years, particularly in Class A properties. So that's going to take a number of years to kind of shake out. Whereas, retail leases can be a bit shorter, and obviously the changes happened really quickly in some of those spaces.
Right.
The last thing I'll say is, as I said earlier about retail and in office use, there's a question or whether some of that office space will become residential space, right, as one particular possible use. Right. We used to think of adaptive reuse as industrial to loft office, perhaps, or maybe residential, but maybe now we have to start thinking about office space, even modern office space being potentially more in need to be residential.
Right. I mean, you look at like the financial district in Manhattan, there's a lot of residential there now that used to be office. So it can work.
Yeah, it can work. And it wasn't really, as I said, the adaptive reuse in my mind was about the old, 100-year-old loft building, but maybe now it's about a 30-year-old building that just there isn't the demand and the location demands and the market demands just more residential space.
All right. Are there any other, taking up a chunk of your time here, so are there any other pieces of the report that I didn't touch on, or any other points that you wanted to make that I haven't asked you about?
Yeah, I think we touched on most of them. As I think I mentioned earlier, land for us, particularly in secondary and tertiary, land demand is I won't say through the roof, because I don't know if it is truly through the roof, but it's high, right? It's just land transactions historically take longer, because obviously it's not just an investment, but someone's got a plan to build and be assured there's a demand for whatever they're planning to build there. But land sales have been particularly robust for us. And then there's the unique vertical segments. Self-storage has been strong across the country, and student housing. That's a segment that I think a year ago, people are like, are students ever going to return to campus? And if so, how will they return? But the investment and the money pouring into student housing has certainly returned, and it seems like people are not necessarily skeptical. So those are two other areas I'd probably point out.
All right. Cool. Well, I mean, self-storage, I think actually, if you look at the REITs, I think self-storage was either the number one or number two for total returns in 2021 compared to 2020. So that was definitely been a very, very strong performer.
Yeah. And I suppose to some extent, it's a reflection of housing lack of supply, right? If you don't have a house that's big enough, you can turn to self-storage, maybe perhaps there's something there too. But I think I just want to point out that there's other kind of narrower, more vertical investment classes that have turned out to be quite robust. And then, as I said, the office sector and portion of the hospitality sector are what still are sort of TBD. And we'll see how that unfolds this year.
Well, I want to thank you for, you covered a lot of ground in a short amount of time. So I want to thank you so much for going through all that with us.
Thanks for having me. It's been great fun chatting with you. And I hope I'm like an economist where I don't have to worry about what coming back to check my words in 6 months, because the market's dynamic, right? It's like just like the weather.
Right.
But there's always lots to talk about, and that's what's always fun.
Exactly. All right. Well, thank you again.
Take care. Have a good day.
David and Dan, this has been a fantastic podcast. Dan, thank you so much for sharing all your knowledge. I love the fact that it was very upbeat and it was very positive. And I think, David, you did a great job of choosing a good guest. Man, what a great conversation. So, Dan, again, thank you for being here. David, of course, thank you for bringing him on as a guest. And our last thank you goes to you, the listening audience. Thank you so much for tuning in and listening to the Common Area Podcast with David Bodamer. If you have not subscribed to the podcast yet, please click the subscribe now button below. This way, when David comes out with a new podcast, it'll show up directly on your listening device. This makes it really easy to share these podcasts with your colleagues. Again, thanks for listening today. For everyone at WMRE, this is Eric Johnson inviting you back in 2 weeks for all the stories that matter to you. We'll talk to you soon.
Thank you for listening to the Common Area Podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of WMRE or Informa. The content has been made available for informational and educational purposes only.
Today's podcast is brought to you by Moody's Analytics CRE. As a commercial real estate professional, you manage complicated decisions every day. And to make the right call, you need the full story. Moody's Analytics CRE harnesses expansive integrated data and analytical expertise from across the Moody's organization, then curates it specifically for commercial real estate professionals. Learn how to make better decisions and improve CRE workflows with Moody's Analytics CRE solutions at cre.moodysanalytics.com.